What's going on, everybody? Welcome back to another solo episode here on the Multifamily Wealth Podcast. In this episode, I'm going to be discussing retrading deals and specifically when you should think about retrading a deal, and then if you are going to retrade a deal, how you should actually go about doing so and how you should communicate whatever concession you're requesting or whatever change to the deal that you're looking to make. And I think that this is a pretty topical discussion to have right now, given the fact that the market is very different than the last time I did an episode on this. I think the last time I talked about this topic was when the market was really humming. And this was like back in 2021, 2022 timeframe. And at that point in time, the market reaction to retrading a deal was very different than it is right now. And there is some nuance there as it relates to like the market that you're pursuing deals in, whether it's now or back then, and the quote unquote hotness of those markets and how hot the market that you were operating in was back then or is now. But I think there are some general similarities and kind of through lines that I want to discuss here in this episode. So, first things first, let's just define quickly what retrading is. So, when I say retrade a deal, I mean you're a buyer, you're working through diligence or through the financing process, and you discover something, whether it's from a physical due diligence or the process of conducting physical due diligence or financial due diligence, or something happens while you're under contract in the debt markets, whether rates go up or whether maybe your appraisal report comes in low and you want to go back to the seller and request a credit, right? That's fundamentally what retrading a deal is. It's asking for a price reduction or some type of concession that compensates you for the risk that you feel you're taking by continuing with the deal, given what you found, whether it's through financial, physical, or some type of lending related DD. So let's think about when we want to actually retrade a deal. I think that's the best place to start, right? And there's different versions of this. Typical events that make you want to retrade, right? Something comes up during your physical DD, something comes up financial DD. You're doing a lease audit, you find some leases that aren't congruent with the rent roll. Your financial due diligence brings up some issues. Maybe the utility bills are higher than what was included on the P&L or something like that. You find some environmental or use case related issues. Maybe there's a misalignment between the approved unit count on the tax card, how many units are at the property, or there's some environmental issues that come up during like a phase one, like underground storage tanks or some type of spill, at some point in the past. And then you have everything that relates to debt and financing and capital. Maybe, I'll put raising capital to the side for now. But I think, the other component to this is you got some issues with debt, because that's the most common thing here. You go under contract and you think your rate's going to be 6.25 because that's where the 10-year treasury is or the FHLB is, whatever your benchmark is with your lender. Rates jump the next 2, 3 weeks while you're working through initial term sheets. And next thing you know, your rate's at 6.757, right? And that materially changes the deal. And you got a financing contingency in your contract, you're going to go back and ask for some type of reduction. The biggest thing here is determining how significant the problem is and then comparing that to the reputational capital that you, or the reputational hit, I think is the better way to put this, that you might take with the seller or the broker involved by asking for a retrade. Like that's the entire process of determining whether it makes sense to do this. Now, this assumes you're buying the deal yourself. If you are buying a deal with investor capital, that pendulum starts to swing a little bit, right? You should be prioritizing that particular deal far more than your reputational capital with that broker or seller because you're a fiduciary to your investors and there's some different implications there. If it's just you, right, then it becomes a much more simplified question to ask yourself. And obviously, there's a spectrum of things that can be wrong here. And what's important is managing your emotions and really objectively analyzing the cost of whatever problem you're identifying, and then thinking about how this impacts your reputation with the broker or the seller if you're going to go in there and ask for a reduction. So let's use a very simplified situation as an example. You're buying a 20 unit building and the roof, you didn't see the roof during the showings, you didn't know anything about the roof, they didn't tell you that the roof was in rough shape. You're doing your physical DD, you get up on the roof and the roof is in terrible condition. And it needs to be replaced. It's completely shot and it's a $40,000 replacement. So you have a defined $40,000 cost here. Now, let's say on the situation with this deal is it's a broker who regularly transacts multifamily deals in this market. They're somebody who you believe is going to be transacting in this market in the long term, as in they've been in it for 5 years. They're not going anywhere. They're probably going to continue. They're probably going to continue selling multifamily properties in this market into the future. And maybe this is even above and beyond that, a seller who's like a larger seller, right? Maybe they're a seller that this is a small portion of their portfolio and they might want to sell other buildings that they own in the future. That's probably a relationship that you really want to prioritize, right? If we're just going to, again, we're just trying to simplify this as much as we can. You probably want to make that transaction as easy as it can be so that you increase the likelihood that if you make this broker an offer on another listing that they have in the future, or even more so, like specifically, if there's another deal that this seller is going to sell either with this broker, or maybe they just want to sell it direct in the future and they just take, bring it to you. You want to make sure that you're not getting in the way of being able to do deals with these folks in the future. Now, let's go back to the issue of the roof and this $40,000 credit. Now we start to objectively evaluate the financial position we're in with this deal. Again, we'll use some logical extremes to illustrate this point. Let's say you're getting an incredible deal on the building. You're buying this property at a purchase price that makes a ton of sense. You've got all kinds of margin. Okay, you do theoretically have negotiating power by going and asking for a credit. All right, the roof shot, they didn't tell you about that, needs to be replaced, whatever. It's easy to point to it. You can point to the roof and say, the roof shot, it's going to cost 40 grand. I want a credit. Here's my offer. That said, you're going to take a little bit of a reputational hit. It may not be drastic. It may not be huge. It's probably not going to nuke your relationship because it's grounded in reality. But there is going to be the thought like, oh, you traded the deal, right? And this is where you're really got to start to evaluate the gray area. If you're comfortable proceeding with this deal with maybe a a very nominal retrade request of like 10, 15 grand, or just not doing it at all because you're like, hey, that 10, 15 grand I might get, whatever, I'm getting such a good deal on this anyways. I'm setting myself up to be in a great position to do a deal with either of these folks in the future. That's where you need to start really trying to analyze the likelihood that you do something else with this broker, with this seller, whoever. And maybe you could squeeze a little bit more out of the deal, but maybe you're actually sacrificing your ability to do deals in the future, making it harder for you to do deals in the future. And this is what I think a lot of investors have a hard time with. A lot of investors are a little bit more scarcity minded and a little bit more fear oriented around problems that pop up during deals and sometimes lose the bigger picture, which is we're in the real estate business to do deals over 5, 10, 15, 20-year time frames and to work with the same individuals many times. That is how we build wealth in real estate. That's how we grow a business, grow a portfolio. If you're, and again, I'm not saying this, it's tough to capture all the nuance in a conversation like this, but I'm not saying that if you are retrading based on the roof being shot, that you're completely negating any likelihood of doing a deal with this broker or the seller in the future. But if this broker is working with other buyers that wouldn't have, then they may elect to prioritize bringing deals to these other folks in the future. And if they bring you another deal, is it worth more than 40 grand if you buy another 20 unit deal off this guy in 2 years? Or this broker kind of helps you get another one done? I mean, that's a conversation that's worth having and actually sitting down and doing some type of risk analysis versus just working through the automatic 1 + 1 = 2. Roof is bad. I need a credit. I close deal. That shouldn't be how simplistic this process is. Now, I just spent a lot of time kind of, again, further illustrating how to think about this. But that said, you never want to do a bad deal in the hopes that you do another deal. So, for example, let's say that this same 20 unit deal, roof's good, but you do a phase one report with your lender and it discovers like a whole bunch of underground storage tanks that weren't removed. They don't know where they are, or some type of like, underground oil spill in the past, and it's a very vague but expensive problem to solve, right? This could be 50 grand, it could be 150 grand. You don't know. You're gonna have to spend another 15K on a phase two report to like even further investigate, and it's starting to get a little hairy, right? And it's undefined. You're really starting to get out over your skis. And that situation, like, yeah, you're probably in a situation where you're gonna have to retrade the deal or just drop it and walk away. So that's how we need to think about retrading a deal, right? One, you need to bucket the problem that you identified into, is this terminal to the deal or not? That's the first decision flow state. Terminal meaning, does this just automatically kill the deal? And there are some things that do just automatically kill the deal, at least for us. If we're buying a 20 unit deal and we find out that there's big environmental issues, environmentals are really, hot button item, or we find out that the seller did some type of unpermitted upgrades of very significant importance, such as like they rewired the whole building with electrical that wasn't done up to code, and that's like hundreds of thousands of dollars. And it's like, okay, there are some things that are just like, wow, that's really big. But what you'll find is like even sometimes in those scenarios, like you can still make the request. It's just going to be massive. But oftentimes, if you have a broker involved, you're better off just walking on it versus continuing to put them in a really tough position. At least that's my opinion on the matter. So, in my opinion, there are very, very, very few scenarios in which a finding their due diligence is considered terminal in terms of killing the deal. So that's like the 5%, 10% of findings. Now, the other 90 plus are just, okay, there's probably a cost associated with remedying this issue. Physical defects, a misalignment in the rent roll and the leases that you got when you're doing your lease audit. Maybe you're doing your due diligence and you got a bunch of shitty electric panels and a bunch of old heating systems, or this seller like wasn't honest about their expenses. You do a little bit of work, you find out like that your expenses are going to be higher. Like all of these things you can assign a dollar amount to, and that's when you get into the mental exchange of how good of a deal am I getting? What's the likelihood that I'm going to work with the counterparty on this deal again? And based on that information, how aggressive do I get in my retrade request, or do I not retrade at all? If you're buying a building and you got some crappy water heaters and you're looking at like maybe another 10, 15K in systems capex on like a $1 million deal, like you better really believe you're never going to work with the people on the other side of that deal again if you're going to retrade. And that's my personal opinion. And even though the market is much more buyer friendly today than it was in 21, 22, when like retrading was like a really challenging road to go down because you were actually going to really nuke your relationships with brokers and sellers because of how hot the market was, I still think that it's important to think about the business in that way. And sure, just because you won that deal, and this is the more philosophical approach, just because you extracted max value on that deal, if it prevents your ability to do the second, well, then you probably lost, right? Unless you are getting out of the business. And in that case, then don't listen to this podcast. Like just extract max value on all of your final relationships with all of these brokers and then stop buying real estate. If that's the case, then then none of this shit matters. But if you're in a situation where active seller, active buyer, you should be willing to absorb some risk and cost in order to maintain goodwill in that relationship. And we've had drastic examples of this in our business where we're buying, $1 million 8 unit building from a seller who owns 70, 80 units and who's getting old and who's like checking every single box of this is a seller who's probably going to want to sell, more properties in the next 2, 3 years, where we're getting a pretty good deal on it. We walk it, like the units are way rougher than we thought. We probably need to spend another 5 grand per unit in renovations, and maybe there's some rough electric panels. We're buying it for $1 million. Our CapEx budget's going to be like 40, 50K higher. And we just say, screw it. Like, we'll just buy it, right? Because we put it under contract at the right price. We have a little room to absorb some cost. It's still going to make sense. We make it an extremely easy deal for the seller. And then that seller feels really comfortable bringing us the next deal. We have done probably over like a dozen deals direct to seller. I mean, it's probably like 15 plus at this point with sellers who really liked how good of a job we did in the first one. And then they bring us the second, third, multiple deals in the future. And once you get into deal 2, 3 plus, that's when you're really making the actual big dollars, right? And that's where you're actually really unlocking maximum value. And it's worth it to take a little bit of risk on the front end, in my opinion. Again, assuming that risk isn't terminal or puts you in the position where you could be doing a bad deal where your capital's at risk, or where you're going to make like hardly any money or something like that. Lastly, let's talk about communicating a retrade and like how you actually message this to a seller or a broker. I think there's some big things that you should do here. One, you want to lead with data, not emotion. You want to present your findings very clearly, whether it's an inspection report, whether it's your financial findings, whether you're working with third-party reports. You want to communicate objective data, not, hey, it feels like it's just going to cost a little bit more to do this work than I originally anticipated. Or you don't want to just share your opinion on a situation. You want to try to be as objective as you can. Hey, our third-party inspector objectively said that this roof is beyond the point of repair. And, these shingles are 25 years old, and these roofs typically carry a 30-year lifespan. So it makes sense that it's the end of life. We have a quote from a contractor or a roofer that says it's going to cost 25 grand to replace. Now, let's say you don't have a quote. Hey, we've done a number of roofs on similar properties in this area as we've invested in this area for a long time, and they typically cost between 20 and 30 grand. That's fairly objective information. Outside of that, too, if this is relative to, one of the toughest things is communicating the cost to turn units and that cost being higher than you originally anticipate. Every seller, every broker thinks stuff costs less than it does, right? That's just going to be how they think about the transaction given the seat that they're in. So you want to oftentimes use the language of this is how much it's costing us to do these types of renovations in other units. In our business, we work with general contractors and they typically charge us this amount of dollars per square foot for flooring, this amount of dollars to replace a kitchen, to do bathrooms. Break it down into very specific numbers for each. Something that I always like to say when I'm communicating this is, hey, maybe you have connections to contractors that would charge you less, or you've done this work yourself historically, or you have a family member or someone who does this work. In our business, this is how we do it. This is just the cost that we have to underwrite. You also want to frame this as a partnership solution and not something that's adversarial. Hey, we still want to get this deal done. We'd still love to work with you. Unfortunately, we're just in a position where our initial underwriting is just now no longer accurate on this deal, and we're forcing ourselves in a position where we have to make these requests or else the deal just isn't going to work for us. Let's figure out how to bridge the gap here and work together to get this deal done. That type of language is very helpful. Secondly, I think giving the seller multiple options is helpful, whether it's a price reduction, whether it's a seller credit. If you're comfortable with the seller doing work before closing, maybe that's something that you offer. Although I typically prefer to just ask for money and do the work myself. So that way I can, oversee the quality of work. If this is a more management oriented issue, like, you thought that all these tenants were month to month, but they were on leases or something like that. Maybe, and now you don't have the ability to push rents or something along those lines. If you can say, hey, if you're able to vacate these units before closing and work out some cash for keys with your tenant, we're willing to offer you $5,000 if that unit's vacated by closing. Getting creative here, I think, is oftentimes helpful and shows that you're willing to be collaborative. And I think timing matters here really a lot as well. A seller is going to be far more receptive to a retrade like early in the DD process versus you carrying this all the way out to the 11th hour and then making the request and wasting more of their time. Like that, I think, is a really important part of this and is underrated maybe in the nuance of like how to approach retrading a deal. Early in your DD process, and I should say this is especially true with a broker and sellers, but like really with a broker. Like right after you do your physical DD versus sitting around and waiting on quotes and looking at stuff, like be communicative with the broker so he can go talk to the seller. And if you're direct with the seller, you want to give him a heads up like, hey, when we were walking the basement, like a lot of the electric panels were rough and it's likely going to be something that we have an issue with. I'm going to try to nail down a price and get you some closure as quickly as I possibly can. I just don't want it to come out of left field when we do bring it up. You're building goodwill and you're setting soft expectations. And there is a little bit of a never split the difference type of mentality with that approach where by almost setting the expectations higher than what your request is going to be, when you make a lesser request, it's actually received positively. And this is something that we do when we do this in our business, right? It's like, hey, Mr. Broker, like, dude, those units are really rough. Like they're a lot worse than I think we originally anticipated. We thought we were going to be doing like a paint and flooring renovation on these units, but the bathrooms are rough. The subfloor is in tough shape. The kitchens are pretty much shot. Looks like we're going to have electrical work as well. We kind of just have to rip up our original budget and revisit this. And it's probably going to be something that we bring up before we wrap up DD. And I'm just want to giving you a heads up. That frames it like it's a big issue. And then maybe, you're like, all right, I'm going to have to spend another like 3, 5 grand per unit. And when you actually go and make that request and you've listed all of this painful stuff you got to do above and beyond that, and you make the request and they go, oh, damn, that's not that bad. You've already reframed their mentality around the conversation versus you not saying anything and then just saying, yeah, I think we're gonna have to spend another 5 grand per unit here. So we're making a request of, whatever, 5 grand times the number of units. So I think that right now, and then again, this is kind of my closing comment. I think right now, comparatively to the last, to 2+ years ago, I think the last couple of years in general have been similar. Brokers and sellers understand that retrades are more common. They understand that this is going to be a more common part of the sales process. You're not at the same risk of reputational damage by retrading a deal as you were in the 2018 to 2022 timeframe. But you still should be mindful of the fact that there are reputational implications in being someone who retrades, especially over smaller items. So follow the decision flow chart, right? Is this terminal to the deal or not? And if it's not, which it's usually not, think about, am I getting a good deal? How much buffer do I have in the price that I'm under contract on, objectively speaking? How much do I value my relationship with this broker and with this seller? And how does that impact what I'm willing to request? And later, if you do decide to request some type of reduction, kind of follow the best practices that I just mentioned as it relates to actually making that request. If you found this episode helpful, which I hope you did, please consider leaving the podcast a rating and review. I hope you guys are enjoying our live episodes of the podcast where I'm actually getting folks in person, in studio. It's at least making for better visual content on the YouTube and on Instagram as well, which is great. But I look forward to putting up more solo episodes as well as in-person interviews. And if you guys have anything you want me to cover too, feel free to reach out to me on Instagram at Multifamily Wealth, and I'll be sure to touch on it in a future solo episode. But thanks again for listening, and have yourself a great rest of the week.